Welcome back. You're watching Today. Now, with just about everything in the financial sector now being digital, Mukuru is building a digital bridge to financial inclusion in South Africa's informal sector. Now, the sector is a vibrant one and pulsating with entrepreneurial energy all around. And of course, it's valued at billions of dollars annually. To tell us more about the role that the organization plays in the financial inclusion of the informal sector, we're joined by the Chief Growth Officer, Juan Seco, for this discussion. A very good afternoon to you, Juan, and thank you very much for joining us. Tell us a little bit about this initiative and how exactly it looks to financially include those who operate in the informal sector.
Good afternoon, and thank you very much for having me. Look, Mukuru has been operating for more than 20 years now, or close to 20 years. And when we talk about financial inclusion, what we're trying to do as a company is essentially build the trust with our customers. We are talking about customers that are financially excluded. And what that means is most of the time, barriers to trust in services that are being provided, that are available, but that many of these customers don't feel are adapted to them, or maybe they are not really customers that are being talked to by some of the financial service providers. Mukuru is here trying to meet the customers where they are. And what we are very good at and what we are very proud of is trying to understand what the customer needs, what the customer wants, and how do we better communicate with them and build that gap.
In South Africa, how do we create an environment where the informal sector, Juan, is integrated with the formal sector to initiate a further economic growth? I've just indicated in my intro that the informal sector is worth billions on an annual basis, and really the formal sector could benefit from that kind of growth.
Yeah. It's totally right? We're talking, as you say, billions. 10 billion is the last number I've heard in the past, $10 billion. If you look at other success stories in other countries out of Africa or in other development markets, the reality is that it's going to be a joint effort by all the players coming at the market and trying to onboard the financially excluded. It has to be a play around trust, as I was saying, but most importantly, it also has to be around being relevant. And many times, some of the people that are operating in cash are seeing that some of the solutions in the market are not relevant to them. It can be either because they find them too expensive. If you are a merchant operating a spaza shop or you're in the townships and you're trying to, accept payments that are non-cash, you're having to pay, what they perceive as very expensive fees. On top of that, sometimes they have to pay for the working capital. And by that, I mean that, the collections that they do through those devices are not settled to them, until 1, 2, sometimes even 3 days after receiving that payment. Whereas with cash, they can operate with that immediately and, be able to fund whatever goods or services they need to be able to continue operating. So it's upon us, financial service incumbents to come in and try to find a solution in the best way. And sometimes there's a commonality in how we approach it, but it has to be a joint effort by everyone in the market.
Juan, that does speak then to also the trust of digital platforms by these informal traders. Like you say, for them, cash is king. It's immediate. It does not include with it exorbitant banking fees. How do we then create that relationship between digital platforms like yourselves or other financial service providers, as well as these informal traders?
Yes, there's always a sort of tipping point when you come to that, right? So if you talk about financial services, and most typically people talk about payments because it's the first layer of foundation of digital transactions, right? First is payments, then we can start talking about loans and savings or insurance. But the first layer is always storing the value digitally and transact with it. And there's always a tipping point, and by that I mean, the more users are able to start storing their value in cash and transact with it, the more merchants are feeling compelled to accept that payment method. And similarly, the more merchants accept digital transaction services, the more compelling the proposition of storing your value in a digital way feels to the customers that are able to have that option. And this is a long battle, and it takes grit, and it takes a lot of the players in the market to do it, and it also involves, market enablement, right? If we look at success stories like Nigeria, or if we look at success stories like Kenya, the reality is that there's always been a precursor in the market that was able to roll out, whether it was M-Pesa or whether it was regulatory push in terms of non-cash transactions in Nigeria, that was sort of enabling or pushing customers and merchants to say, okay, now it's better to do this rather than holding my cash. And after that happens, everybody starts to engage more digitally. So at the end of the day, it's going to be all of the players, including regulators, including financial services incumbents like banks, etc., being able to accept also fintech players like us to be able to be playing in a level playing field.
Thank you very much for those insights. That is Mukuru's Chief Growth Officer, Juan Seko, joining us this afternoon for those insights. Have a great day further. That insight around the financial inclusion of the informal sector, as you've heard, they're contributing about $10 billion to the economy on an annual basis. And of course, that could be plugged in to the formal sector. But of course, being able to provide the necessary resources to those operating in the informal sector for them to thrive as well.